The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I will have to apologize for giving the date of the Mercury retrograde as yesterday because it's actually today. All I have to do is make an error on this program and I get more emails than I ever get before. So I have to start making more errors, I guess. But I was definitely under the wrong impression. I looked at it, I wrote it down, I had it written down right. But when it came out of the lips, they was wrong. But it's the 28th today at 1:20 Eastern Daylight Time is when Mercury actually does the retrograde motion where it slows down. And we like that signal because it's related to the speed of the communication planet, which is Mercury, and then we'll look at that. Now, we do have one possible trade setup for everyone here that likes the gold market. I've posted into Tiger TV here the gold over the past 10 days, and as you can see, we've made a perfect 78% retracement so far this morning at 1262.90. That was the exact number. It hit that. It promptly backed off $7 an ounce, and now we're still there. Now, if gold's going to be good, it needs to break above there sometime today. And, we have this Mercury aspect that could be having a pretty good effect on this, so we'll have to watch it closely. But, silver is still at the 61% retracement, down around the 1740 level. So, but silver can move, 30, 40 cents in a heartbeat because it is so thin out there compared to what the gold market is doing. If you'll notice this gold chart, yesterday, the market came down and made a higher bottom. As you can see, those cycles that are there, those are just 15-minute cycles, spread out over a one-day period. And you can see this same cycle on an hourly chart or a 60-minute chart, a 240-minute. It pops in, but that's that 135 pattern where you have the higher bottoms, and that ABCD pattern measures right up to the area where we were talking about today, around that 1263 levels. This is going to be a really important day in the gold market. One of the trades that we talked about yesterday that we liked was the Treasury notes, and we were also listening to what John Logan talked about, and he was liking the Treasury notes. They moved more than $1,000 if you bought those down there because it was a pretty good move. The upside selling off a bit this morning with all the activity that we're having, but it's been a very, very volatile night. This whole thing started because of the Japanese yen. I'll post this up and give you an idea. It was the Nikkei market was down better than 3.6%. But the big move was in the Japanese yen, U.S. dollar. The yen just started to soar. This happens to be the reverse chart of that, but it's the same thing turned upside down. And it was a really big move. And we're getting down to near that 107 level because the yen got down to, in fact, it's trading at 108.10 right now. So it's still got a chance to get down below that 107 level. We need to be watching. That's equivalent to what we're looking at in the gold at around 1190. That's the main thing. The one thing that I did want to mention is that we have a situation, we have questions about the Bradley model, and I'll cover those in just a minute, but there's another trade that we've been watching that has really, popped up on the radar. The problem is that we went up to it, and we've not actually been able to get above the area that we were watching, and that is in the British pound. If you'll give me 1 second to put this in here, we'll put this in to the thing, and then we're going to talk about politics a little bit, because I noticed that we have a situation for Indiana basketball fans where Bobby Knight has endorsed Donald Trump. And I happen to know Bobby Knight, being from Indiana. His assistant coach for many years was Ron Felling. And Ron was from a little town just about 10 miles east of Terre Haute, Indiana, called Riley. He was a couple years older than me, but he was a good family friend, and was actually in my wedding party many, many years ago. And he went to Lawrenceville, Illinois as the basketball coach, and he became the best coach in Illinois basketball history. And he had a player that was, I can't remember the kid's name, but he was really fantastic. He was going to be another Larry Bird. And Bobby Knight wanted him to go to Indiana, and Knight was looking for an assistant. And so Ron and his basketball player student went over there, and they spent the next almost 20 years together. And but anyway, Bobby Knight is a very colorful, unusual person, much like much like Donald Trump is. But you cannot knock his success, folks. He's very, very intense, but incredibly successful. You know, he's a really firm believer in the art of war. That's one of his favorite books. But he's actually a really nice, fun guy. I met him after one of their championships in 1982 or 85, I forget which was the year. And he was. I went over, looked over his portfolio, and boy, was he worth a lot of money back then. He was worth over $100 million. You know, back then. I hate to think what he's worth now, but he was a really good investor. He studied the stock market, and you know, he's long term, but he really did a pretty good job. He was a chartist, and he subscribed to the daily charts of Bill O'Neill. So anyway, it's a long story, but anyway, that's neither here nor there. Okay, the question that we've had for today, and we'll put this one up. Yes, he was an Olympic chair thrower, Peak. He won a bronze medal in the 1960 Olympics when he competed for the basketball team for Ohio State, which he played with Havlicek and Jerry Lucas. And then he also was runner-up in 1964. So we'll see what's going on. All right. The main thing that we're going to look at now is the Bradley model. We've had several people ask me about the Bradley model. And the problem is you get online, and I'm going to post this one there because this is from a group called sidereograph.com. I know absolutely nothing about them, but this is the Bradley model that they've put up. You'll see it has, all kinds of dates across the bottom. And, frankly, I don't know what they've done, but the problem with the Bradley model is that it does allow you to change the weighting of the planets. Now, I never changed the weighting of the planets from what Donald Bradley really did. That was the work that he did in 1947. He was using the work from the physicist from Yale University on the weight of the planets. I never changed any of that. The model is done for me by Ensign Software, so that's what I follow. I try to keep it as absolutely as simple as possible. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've been talking about the Bradley model and, the different things you can do with it to make it, look interesting. You can certainly change it. Fortunately, I was able to run into a young man that Shane Smolian, who helped me do the book. He did the book. All I did was say, this is where the pages go. He did a fabulous job. He was incredibly good with the computer, along with he was very, very aware and accustomed to using Alfie Lavoie's titanium software that gives you all the astrological stuff, and we agreed on some ideas that might be interesting, but he's been able to take it to a level that really hasn't been done in a very, very long time. And part of the thing that we're looking at here in this Bradley model, and the one I posted now is the one that I use. This is the one that right out of the book, Bradley's book from 1947, the old $4 book that everybody talked about. And if you look at the patterns here, like what we're watching now in the Dow Jones, we're seeing an absolutely perfect A, B, C, D pattern. Now, it's a week off from where the Bradley model, should be topping. But let's go back and look at this for what the Bradley model actually did. If you go back to look on May 19th, that was the day when we had Mercury retrograde. We had Norm Winsky on. We had a new moon. I think the following day we had Shane on. Showing the speed of the planets, and that was related to Mercury going retrograde again. But you'll notice that was the absolute high day in the market, yet the Bradley model was showing it as a low, and that's because it inverted. Unfortunately, Norm is pretty good at picking out these inversions. I haven't been able to be nearly as lucky, but if you'll look at in December, late November, let's try that again. Early It was early November, late October, early November. You can see at point B there, we were making a lower top right at a Bradley market date. And as you can see, the market went down and then made that double bottom. And again, you'll see the double bottom was also very, very close to where the actual low came in within about 2 or 3 days. And then since that time, there hasn't been an intervening low there on March 14th like there should have been. So it's only a really rough estimate of what the cycles are doing. But boy, to think that these things are not related to some of these planetary phenomenon, you've got to stretch it a little bit, because these dates are very, very accurate. Unfortunately, the inversions are what causes the problems. But that's how I view the Bradley model. It's just it's never a standalone thing. If you're going to use something standalone, use the patterns, because the patterns have both the price and time in them. And when you have those along with the Bradley, then you have something that is really, really very, very good. And remember, if you look here in May, we have the whole month of May is down, and that fits in with the seasonal of sell in May and go away. But that seasonal, again, if you look at this from a seasonal standpoint, the first 50, 60 years of the seasonal of May, sell in May, go away, didn't work very well, but the last 50 years has done pretty well. That's why we want to have Steve Moore's group from More Research out in Oregon to come on the air and talk to us about this, because I think they can do a good job of talking about it. They're the premier people for the seasonals, folks. There's no one any better. I mean, anybody that's in this business for very long will migrate to Steve Moore, because he's been around for a very, very long time, and he certainly knows what he's talking about. Now, last night, all of these markets were hit pretty hard, and I wanted to switch over to the German DAX, because our market and also the German DAX have also stopped right at a 61% retracement of the low from way back on April the 18th. And so that's an important low that we had there, because the market gapped down that day well over 200 points, and it immediately, took off to the upside, telling us that was such a strong cycle low. And now we've come down and we've tested this in the DAX. Now, if we can get the DAX below the 101 level, then, this thing could be moving to the downside. We did the same thing in the S&P futures. We had the exact same situation. In fact, we were talking about this yesterday in the market, and this was long before the Fed came on, and we didn't know what the Fed was going to do or anything, but the S&P went right up to that resistance at that 2092, 2093 level, and that was after it went down and tested the 2077 level, which was the 786, and then we went up, and then after the Japanese prime minister, or I don't know which one it was, one of the finance ministers, or one of those dudes came out and said they were not going to do too much with negative interest rates right now. Evidently, they must have taken a poll with the Japanese people and said, how much are you willing to pay us to keep your money in our bank? And I don't think they like that very much. Doesn't make any sense, but that's neither here nor there. It breaks every banking principle that I've ever known, and but maybe I don't know enough of them. Who knows? We'll see what's going on. We're having some earnings coming out. We've had Facebook today is going to be screaming to the upside. I haven't had a chance, to look at that, but to me, it's probably making some type of an expansion high up in this area, but that's neither here nor there. The other thing is we have a situation in crude oil, very, very interesting one that looks quite nice. If you'll give me a second here, I will bring it up. I hope I'll bring it up. I've had it all ready to go here all morning. Yep, there it is. And we'll see here that we are right in the wheelhouse for a upturn in crude oil. That's making a 78% retracement off the October high. You'll notice that it has a 1.618 expansion of the high from the May 19th area, and then we broke down to the 382 retracement, and then we've rallied up and we've made a nice little butterfly pattern up there. So you have four numbers coming in here at 45.65 in the crude oil. So keep an eye on that. Anything above 4,600, tells you you're probably going to go on up to the $50 level. But right now, it's got a lot of little things going on that look quite nice. If you'll look at the butterfly on the far left during September, October, that's the same pattern that we're looking at right now between March and May. And that's what we're looking at. I listened to John this morning, talking about this crude oil up around this 45, 46 level. And that's certainly an area where there should be some resistance based on these patterns and the Fibonacci numbers, that we're watching here. So that's another one that looks pretty good. So we've had the crude oil, we've had the gold acting right that same way, and the other one is the British pound. We're looking at that British pound, that 146.50 level. We've only been to 146.30, so we're still waiting for that one. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've got to answer a question here from one of our subscribers, but first, one of our listeners. But first, before I do that, I wanted to post the note chart in there just to give you an idea what's happened to that. John Logan had the exact low on that, I believe, at 129.01. I was looking at 129.09, which was a fib point in a Gartley pattern, but it's rallied, $1,000 off of that. It's backing off a little bit right now. But if this is any good, it's not going to take out that 129.01. The first profit objective on this would have been right near the profit-taking target level of $1,000 if you did that trade, because original risk on it was half a point, and you try to make 2 points for every other point that we're making. The question that's posed to me last week by someone, and again by someone this week, it relates to astrology and my belief in it and stuff like this. Folks, I got started with this. I've told the story a million times. I'm not going to go over it. Started with Gann way back in the 70s due to Jim Twentyman. Then it was Mary Rivers that did the silver stuff. And then in 1986, it was Dr. Ruth Miller that got me started and was able to write the book and several other books about astrology because I started to do it. But the questions that were asked to me was my belief in not just the astrological dates that we're looking at here, but the astral determination of how the astrologers make the determinations of what's going to happen with some of these things, like Mercury being the ruling planet. This stuff is very, very old. It goes back thousands of years into Indian culture, and also the Sumerians and the Babylonians, and whoever knows what it is. I don't know. My experience, I've been very afraid of it. I was Catholic, and I was afraid of astrology, not because of the false god or anything like that. It's just that I didn't understand it and I didn't know anything about it, so I stayed away from it. In 1986, I have received as a birthday gift from one of my buddies from Drexel a reading with a famous astrologer from California. And she sat down with me for 2 hours and discussed my chart and what was going on and what was happening. And for the next, that 2-hour period, she described what was going to happen to me for the rest of my life. And that woman never missed much. And I'll tell you, when she was telling me the stuff she was telling me, I said, I said to myself, there's absolutely no way that this is going to happen. She said, you're going to write books. She said, you're going to travel extensively all over the world. She said, you're going to have a lot of friends. You're going to enjoy doing what you're doing. You're going to live a very long life and just enjoy it. She said, you're one of the blessed people. And here I am, just coming out of a divorce. I'm 1 foot off the ledge of jumping off, and she's giving me all this stuff, and I walk away, and I said, Barry, I said to myself, he's the fellow that gave me the gift. I said, he really wasted a couple $100 on this one, because this was so far off I couldn't believe it. And yet, as it unfolded in the next year or two, Dr. Miller came into my life again and got me started into astrology, and that's what moved me, to where I got to today. But frankly, folks, the answer to this stuff, I don't know if it's in astrology or not, but I know the patterns are there. I see those working all the time. So that's the bottom line of how I look at astrology. I have a lot of friends that are really good at this, Norm and Shane and Jim Twentyman and Bill Meridian and Barry Rosen and a whole bunch of other people. I hope I haven't missed anyone. I'm sure Alfie Lavoie. But all these people do a great deal of research, and what they're finding is really quite amazing. And it's never 100%. there's always something out there that could make it move, and whether it's quantitative easing or whatever it happens to be, who knows? But we'll watch what's happening. That's my experience with the astrology. I don't want to go into it any more than that. I went to the Vatican and back in '88, and I saw where the Vatican vaults were. I got down to level 4. That was one level above where Tom Hanks was in the Da Vinci Code, and basically she told my high school teacher told me that the real heavy stuff was on the floors of 6 through 10 on the downside, and nobody got to go down there. She had never met anybody that had a pass that went that deep into the Vatican vaults. Whether that's true or not, I don't know, but that's all I know. Anyway, we did take out the low of the. We'll get back to the markets here because I know that's what you like to hear. We'll get back to the low on the 25th of April. When the S&P hit 2071. Then we made a beautiful ABCD pattern to 2094. Then we came down, and last night during the wild and woolly trading of overnight trading, we took out that low by 1 point at 2070, and now we're in the midst of a rally. The 61% retracement of this rally back comes in at 2085. So if this market is going to be bearish, it's not going to get much above the 2085 level. That's the way, if you looked at numbers, the 786, of course, would be at 2089. Now remember, because of the people in Japan reacted so violently to what happened over there, and the whole world did, it wasn't just Japan, it happened to all across Europe and here. So they're reacting to what the Fed is doing, and there's a perfect example of what's really happening. The Fed is the market. It's basically pushing the market where it wants to go, and it can do it very easily because the stock markets are easy, to play games with. Now, the foreign exchange markets are not quite as easy to do that because there's so much more volume there, thousands of times the volume that we have in the stock market. So you've got to respect the fact that even though these things look like they could be bearish, that doesn't necessarily, mean that's what's happening. Now, on the bearish front, should we get down below that 2070 level, all that does is it sets up the next retracement that comes in at the 786, which is 2062. There's where the wagons will be circled, and we'll see if we get below 2062. Then you're looking at a market that'll be going down, a great deal lower. So keep an eye on those. Those are the ones that look really interesting. So we've got a lot of patterns that are happening, in the pound and in the gold and in the crude oil and in the stock market. So there's a lot of trading opportunities going on here to see how they're going to unfold. Someone's asked a question about the Facebook, and I'm just not able to bring that up during the time when I'm on the air, because if I do, I have the possibility of losing the data stream, and I don't want to do that, because then it causes problems, getting back into the market. But the market is rallying back nicely from this big sell-off. We're already up 10 points off the bottom in the S&P, and I believe about 80 to 100 points off the bottom in the Dow Jones. So this is we'll keep an eye on those as we look through the rest of the day. Okay, 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've put the chart of Facebook up. As you can see, it's gapped up about, looks like about 15% this morning. It's taken out the double top. We had a really nice double top up there, 117. We backed off to 107. And now with this move today, you know, it's gapped up even more, taking out those old highs. I don't think this is a breakaway gap, but that's just my opinion. The way I would handle it, if you wanted to do it from the short side, the safest way would be to sell it if it makes a new low on the day, which is down around 118.5. And that would give you a potential shooting star candle, which would be, you know, extremely bearish if that were the case. And then if you sell it as it makes a new low, you put your stop above today's high, which is at you know, 121.01. Actually 120.79. You'd put your stops. Your risk there would be 3 points. Now, if it doesn't happen today, I'd be looking at the same thing tomorrow. Because what I'm trying to do is I see the market. You know, everybody's going to be talking about this monster, you know, pattern in Facebook, and maybe it is, but none of these others have panned out this way. So I'm just assuming this is going to be just like the others. But we'll see if that's going to be the case. But you want to sell it on weakness here because you don't know what this high could be. It could be a 1.618 all the way up to 126. Because we don't have enough data. It's only been this huge gap that we've had this morning, and you would be assuming because you have Mercury going retrograde today, the people that are making this decision to buy Facebook is not the right thing to do when you have Mercury, you know, going in a retrograde motion. But there again, that's the interpretation of what this astrology stuff could be, and I'm just telling you what I see from the cheap seats here on 100 South Broad Street at the offices of Duke & Duke. All right, the next question that someone's asked was about the cattle market. We've had a pretty good bounce off the cattle market. We had Rich Anderson on Friday talking about the bearish report that he'd be looking to be buying into that, and it certainly had a good chance. It's rallied more than 6 cents off the bottom, and that's what we're looking at. We've had a question from one of our favorite listeners in Atlanta, Georgia, Mr. Danny, and this is we were talking about natural gas. I will put this up. This is the one from last week, Danny, but it does follow through with what we were talking, because the market topped at the 217 level, which completed that 61% retracement in the ABCD pattern, and then it broke all the way down to that trend line that you see there right now. We got all the way down to that one right below the $2 per cubic feet level. So this would area. So this would be the area where you'd be wanting to to buy crude oil. If you're short, you'd certainly want to be covering your shorts from that level. So this is the area it's got to hold. The natural gas really needs to hold 190. I think we're right at 199 to 200 right now is the last price I saw anyway, but that's what it looks like on this. Now this had a really nice bottom down here where we had the ABCD bottom down in March, and now all we've done is make that 61% retracement off the January high, and with a really good thrust, and now we're backing off a little bit. So we'll see. We got a lot of these commodities are doing pretty much the same thing. We're seeing the same thing in wheat, corn, and soybeans. They've also had a really strong rally, and boy, you talk about something that's contra-seasonal. That's got to be it, because we hardly ever get a move like this in the beans and wheat and corn this early in the season. About the earliest you get it is late May. After the beans are planted and the corn is growing pretty good, then you start to see some effects. But this year, the market really exploded to the upside. And Rich told us that he thought that a lot of this was, fun buying, because they have to be involved in these things once they start. And, once one fund starts to buy, another one comes along, and it takes it, to the same area. So we're still waiting on for a really nice pattern on the beans, wheat, and corn, and we've got really nice 78-cent retracement levels in the wheat and the corn and the beans. So all we want to do now is to see if these things will unfold to the area that we're looking at on the downside, and I'm looking probably around mid-May if we can get enough backing and filling here on the charts, to really give us a good idea of what we're looking at. Now we did get up and we hit that 61% retracement now in the S&P at the 2085 level, and we're going to see, we're right there right now. We're just going to see if it's any good. The risk here is above the 786, which would be the 2089 level. So actually that's 2090. So the risk there would be about 6 points. So this is the retracement back in the S&P. If in fact this is the actual one that we're watching here. One question that we've had this morning was about the euro. We've had a lot of activity, of course, in the yen and the pound and stuff like that, but the euro is still in a downtrend. We've had a lot of resistance up at this 113.60 level. We're trading at 113.39 right now. It hit it several times last night above that 113.60, but couldn't get above it. So that tells us that we're looking at something that could be, very, very interesting from the short side on the euro, because it has a longer term downtrend that is going on, much like what the British pound has done. The only problem with that British pound is it just didn't get high enough for us to trigger the sale, because we were looking for it to get above that 146.50, and we only got to 146.32, and now we're trading at the 145.67 level. So we've got a lot of activity for everybody today. But a lot of buyers come in this morning when the market's down quite a bit, because there's no skin in the game, and they will be interested in buying. And remember, this is a pretty big day, astrological wise, with that Mercury going retrograde. So don't get too enthusiastic either from the bullish side or the bearish side. Just sort of wait for the market to come to you to the prices that you'd like, and you'll be far better off than if you chase something. And chasing it doesn't do very much at all. All right, there was one other market that I wanted to mention to you, and that was I did do the German DAX, I believe. I covered that one. I wanted to go over the soybean market here just to show you what we've done here in November beans, because we've had this backing and filling these last couple of days, and we're still in this same area of around $10 a bushel in November beans. So what this would set up is a possible ABCD from the high we made on the 21st. At 10.23, we came down and we dropped 50 cents a bushel, and then we rallied up to the 10.12 level. And if we subtract 50 cents a bushel from that, that's going to take us down to the 9.65 area where the original breakout took off. So that would be the area that we'd like to see November beans come down to. You can write that down, and we'll follow it as we go through. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And as a reminder, I will be doing tomorrow's show. That'll be my last show for the week, on Friday. But I'm going to be taking the next week off, and we'll see you all on the following Monday, which I believe will be the 9th. It'll be the 9th. We need to have Norm Winsky on May the 5th. That's Cinco de Mayo, but that's neither Mexican Independence, their 4th of July. But he has some really important stuff that day that he wanted to discuss. So I hope the folks at TFNN can schedule Norm to be a guest on someone else's show who's taking my place, because he has some really great information all the time. And when he asks to come on, I certainly like to make that request for him, because he really does have some great information, and he's been pretty much spot on, so we need to sort of pay good attention to it. The main thing to watch here, these resistance points that we've had, 2094 is still, we could go up there again, I guess, and look at it, because any market that can go down 20 points can go up 20 points, as we've seen yesterday and again today. Keep an eye on that gold, because that 1263 level was a big 786 retracement, as we were making a 61% retracement in the silver. And of course, watching crude oil at the 4570 level, because of the fact that that's the butterfly pattern that was similar to the one that we had, back in October. All of those are lining up. And I do believe we're still going to be going higher in the notes. It did make the first profit objective, but we still should be going higher in the notes over the next few days. Any move below 129 in those notes would really signal much higher rates are coming, as a surprise to everyone. But we will let that be decided by the markets. So those are the main ones that we want to be watching today. And I think that's just about, we're almost at the end of the day. What other Apple. I posted a chart of Apple in here, because to me it looks like Apple's going to go to 87 in the next month or two. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.